it's also really important that they retain proof of bringing those funds into the country. Because again, down the line, if the asset is sold and they're looking at repatriating the funds back out, it can be incredibly difficult to do that without that. So,
are there any tools or services that you would recommend that could help investors monitor that exchange rate and optimize the timing of that international transfer?
being South African tax residents, we have to bear in mind their SARB annual allowances or the Reserve Bank annual allowances. Every South African resident can externalise 1 million rand per annum.
Currency Partners have got 15 years of successful trading. What would you say have been some of the things that's contributed to that? Gareth, thank you so much for joining us today for a very exciting episode of Real Talk SA. We really, really appreciate your time to be here. Before we dive into our discussion, I really wanted you to just share with the audience and the listeners a little bit about yourself, which company you represent, and what it is that you guys actually do.
Great. Thanks, Mia. I really appreciate being here today and the invitation. Looking forward to the chat and unpacking it. So, yes, I'm Gareth from Currency Partners. We are a foreign exchange intermediary. By nature of that, we assist clients with foreign exchange transfers across the board for foreign investors looking at bringing funds into the country to purchase property, people investing abroad, corporate to import and export. We are a national company. I head up the coastal region, so KwaZulu-Natal and the Eastern Cape. And yeah, that's us. We add a lot of value to our partners who have clients looking to bring funds in or externalize. We provide a great service outside of the banks. We have a much closer feel than the banks would. And I think this translates into a good product for everyone.
No, that's fantastic. We have obviously been working with you guys for a while as well. And it's really, I think for us, like added another service offering to our clients, which is great.
Absolutely.
We're going to jump right into our discussion with the first question. And that is, what would you say from your experience in the industry and in the business is the key foreign exchange control regulations that non-resident investors need to know about?
Good question. I think it's such a critical thing to get right up front, because if there are mistakes made, it can become quite a handful to resolve. But for your non-resident investors don't have a limitation on what they can bring in. So it's not like a South African resident who can only externalize 1 million rand per year. They can bring in any amount. So they are not restricted there. But what's important is that they do have a bona fide source of funds. They need to be able to show where the funds have been derived from. They need to be able to prove that via a document, be it a bank statement or a sale agreement document if it's a foreign asset. It's also really important that they retain proof of bringing those funds into the country. Because again, down the line, if the asset is sold and they're looking at repatriating the funds back out, it can be incredibly difficult to do that without that. So I would say sort of just knowing that they have an unlimited amount they can bring in to retain that inward SWIFT. Obviously, their FICA documentation needs to be in order as we understand it. That would be a passport copy. If they are foreign investors living in South Africa, they would need some form of residency permit there as well. But that essentially would be it. Just proof of the inward funds and their FICA documentation, and retain everything. Keep your inward documentation.
Sounds pretty simple, but I'm sure it's not quite that simple. So what would you say is a typical process for a non-resident buyer transferring funds into South Africa for specifically a property purchase?
Perfect. So your typical process, they've got options. So we won't package it into a box and say this is it, but you've got a foreign buyer who could potentially pay the conveyancer directly. We would say, if they're going to do this, think carefully about it. If you're going to pay your funds into a conveyancer's trust account or your attorney's trust account, you're going to lose a bit of your independence there. So you don't have control then over the rate that you're going to obtain. You don't have control over the banking institution you use, and you won't retain the documentation. That documentation belongs to the attorney. So I think a good way to view it and to retain independence for the buyer is to make use of an intermediary, somebody who specializes in foreign exchange. And what they can then expect is to open a bank account in their personal name. They can then fund that at their own discretion. They can bring funds into the country when they need to. They have control over the timing of the conversion and ultimately when they pay these funds over. And it takes the pressure off needing to bring the funds in. So I think to keep in mind, they could expect, or what a buyer should expect to do, is to open a bank account in South Africa that's compliant with the regulations and then be able to operate that bank account going forward.
I think that's great, because that property transaction could also, for many reasons, fall through. And then the money is sitting with the said conveyancer.
Absolutely.
So I think that's a really, really good add-on value. So now I want to talk to you a little bit about how currency fluctuations impact the profitability of property investments, specifically in South Africa.
Yeah, they can have a huge impact. So speaking from example on a sort of a scenario-based approach, we've had a client or a foreign investor who was looking at purchasing a property in South Africa. The rates moved against him. The rand strengthened. It's an unusual scenario in the last sort of 10 years in South Africa, but the rand strengthened, and the euros that he'd set aside to purchase his property now didn't stretch as far as he intended. So he couldn't purchase the property anymore. Likewise, you've got the reverse where the rand weakens out dramatically. We've seen that in recent weeks where it's dropped off a full rand or more over that sort of time period. And there again, now, if you've got a high value property and you've got euros or dollars or pounds offshore, the property that you can afford is now expanded. So instead of buying one apartment, you can afford two, or you can afford a larger property. So exchange rate volatility has a massive impact on return, which is why it's critical to use measures and tools that can proactively manage currency risk and minimize that volatility.
It's actually been quite nice because obviously we've worked with you guys. We get your newsletters and emails and often advising of those fluctuations, and we send that on to the client so they know and they're aware as well. So I think that's very valuable. I also wanted to know, are there any tools or services that you would recommend that could help investors monitor that exchange rate and optimize the timing of that international transfer?
Absolutely. So what we often see, we know that property purchases are time sensitive. The funds need to be in by a certain date in order to fulfill the contract. Take the risk out of that. We can use measures such as forward exchange contracts, which allow you to confirm your rates up front. So essentially, we see a rand weakening now. We can book that rate, know exactly how many rands we're going to have available in 6 months' time, 3 months' time, whatever the case is. Even if the rand moves on the back of that, it makes no difference. We know that our 100,000 euros is worth so much, and we can move on from there. So forward exchange contracts are a great way to go. We've also got something called a foreign currency account or an FCA account, which allows clients to bring funds into the country. They're at arm's length. If there is a rates movement, they can convert and exercise that exchange and still be able to afford their property. You've also got a few timing-related tools in the toolkit, such as a rate alert or a firm order, which allows you to chat to our dealing desk or a dealing desk, confirm what target rate you would like to achieve, and if the market reaches that, it will execute automatically without you needing to have your finger on the pulse. So if you're on holiday, you're in Cannes on a yacht or whatever you're doing.
How nice would that be?
Amazing. I mean,
Yes.
your dealer's still going to book that trade for you and you're not going to miss. That can be a firm order where it will book automatically, or an alert where the dealer will call you and have a chat around that. And as sort of an attachment to that, you've got a stop loss where if the rates are moving against you, you can set your worst case scenario. So if the rand is weakening and you want to convert, or the rand is strengthening and you want to convert, you can minimize your risk linked to that. So
I think that's amazing. So what if a client wanted to, they're not quite ready to purchase, but they will be in, say, 3 to 6 months' time.
Yeah.
Would you advise them to bring in the money now already, or and leave it like in that bank account that you guys would obviously set up for them? Because then it's ready, right?
Yeah, exactly. So I mean, if the clients have got, your investors have got their funds available, you want to be able to exercise that purchase when it's convenient for you. And we often see delays in the space. There are many intricacies in the foreign exchange environment, which can pop up, delay these payments. Banks are not always perfect. Delays do sort of come through. So there are options available. Bring the funds in. We can provide options where clients can earn interest on funds, and it makes it a lot easier on the back end. So I think, you don't want to get stuck in a time crunch where you miss a purchase or you delay a contract or there's penalties because of timing. So I think it's always a great idea to have the funds.
I think especially in high demand areas like Cape Town, we've recently relocated there, because often the properties get sold within days of being on the market. So if you have to wait now for funds to come in, you might lose out on that opportunity. So I think that's a really good piece of advice to actually give to people, because often they've got money saved up, or they have the cash readily available in their foreign bank account, but it needs to obviously be available quite quickly here.
Absolutely. And we are often able in South Africa to achieve better interest rates than they have overseas. So if you're sitting with a dollar-based bank account in the US or whatever the case might be, they could potentially earn more on those funds in South Africa than in their home country. So it's almost a few calls
I need to make now after this. And then, we've noticed a rising trend where non-resident entitled entities or individuals loan funds to South African resident entities or individuals. So in order to purchase properties, of course. So what are some of the key considerations here?
Yep, it's a great way of maximizing your tax efficiency on these purchases. So whenever we see a loan agreement being entered into, it's vital that there is a loan agreement in place. Unofficial loans, handshake loans, not great in the eyes of exchange control. So you want to make sure you have a bona fide loan agreement. You want to make sure that the funds originate from the bank account that's on that loan agreement. The lender is an individual or a company. It can't be a third party who then loans the funds. And this must be placed on record with the SARB, the South African Reserve Bank, prior to the introduction of the funds. If the funds get here and then we enter into this and we put it on record with the SARB post the fact, it will certainly have an impact on the transfer itself. So you want that agreement to be in place. If you do not have that agreement in place and you're looking at some point, or the client is looking at some point to repatriate those funds back to their home country, it is incredibly difficult. You're looking at SARB applications, 6-week delays, costs, additional documentation. You really want to have that up front. It can even impact a buyer's ability to obtain a bond if a loan agreement is not correctly structured. So very important.
I think a lot of people don't know that. So do you guys actually also assist clients with those additional services like the SARB application, any additional things throughout that transactional process?
Absolutely, yes. So we've got a full exchange control team, which benefits all of our clients. They have access to that team who will compile the applications, make sure they're correct, pre-vet them, and then put them forward to our banking partners.
I wanted to also ask you, there's a lot of mistakes that can, creep in. What are some of the common mistakes that you see foreign investors make when entering the market, specifically talking about currency management?
I think we've spoken around it. Timing is a big one. It often takes longer than we anticipate, so don't leave it till the last minute. We often see clients with a deadline of Thursday trying to bring the funds in on a Tuesday. You're going to miss that deadline. Give yourself the time to deal with any issues should they pop up. So timing is one. Also security. Verify your beneficiary details. Make sure you're paying to the correct account. Pay the correct currency. We see sometimes euros directed at a dollar account or dollars coming to a pound account. They will be returned and rejected. That's going to delay your payment. So just make sure that you are doing your homework, making sure the products are correct. There are so many options out there, so many operators who are not correctly licensed. You want to make sure that who you are dealing with is a legitimate company with expertise to carry out these transactions.
And I think there's a lot of, I've